All right, excellent. Yes, so we have a listener question on Nikola Corporation. This is from Simon from Richmond. He's asking, can you please provide a review of Nikola? The stock is up 40% in a week, and I would like to know if there's anything real behind this move. Happy to do that for you, Simon. So Nikola, it's a company that we have looked at in the past. Symbol is NKLA. It's trading at about 11.30. Actually, I think it closed today at about 10.60. And it's about a 500 million market cap company. So what they do is they develop and manufacture zero emission vehicles, primarily hydrogen fuel cell electric trucks for the commercial and transportation sector. And they're also looking to revolutionize the trucking industry by offering not just the vehicles, but also an entire ecosystem or infrastructure of hydrogen fueling and maintenance services and stations. So you are very correct that it has had a fantastic week, up about 40%. I think it was up at one point today. It was up at 25%. Then it pulled back. I think it closed about 16% positive gain. And what really precipitated all of this was they released their Q2 2024 deliveries numbers. And these numbers exceeded both their internal guidance is in addition to analyst forecasts. So that is what has some people excited about the company. But if we were to take a longer view look on this stock, we see a much bleaker picture. So going back over the past year, the stock is down considerably for investors. And we actually did, we've looked at this company in the past, and we actually did a segment on it on the podcast 3 years ago. I don't even remember if we had the YouTube podcast back then. So this goes way back, but it was about 3 years ago where we reviewed the company, and we did not like it back then. So this is a company with quite a history. If we go back the full history of the company, it became a publicly traded company in June of 2020 via a SPAC transaction, and then shortly after becoming public, it achieved a valuation of about $34 billion. So a $34 billion market cap. Well, this company had zero revenue. So we looked at the company on that basis, and we felt it was very reminiscent of the dot-com boom, where you had companies with multi-billion-dollar valuations that had no revenue, and in some cases, barely any business model. But shortly after that, there was a report, a very damning report issued by a short seller, alleging all types of fraud from the company. And, typically we like to look at those reports and base it off of the research, because sometimes those reports are not very credible. But in this case, for Nikola, the chairman of the company actually resigned 10 days after the report was issued. So that was not a good sign. And since then, it has pretty much been mostly downhill for the company and its investors. And then just recently, in June 24th, the company decided that it would do a 30-for-1 share consolidation. And that's typically what we see when a company has a significant number of shares outstanding, and the share price is extremely low. So that was done, which is why it's trading today at about 10.60 was the closing. But let's take a look at how this company has been performing recently. So I'm going to take a look at the Q1 2024 results. The Q2 results are not out yet. They have released the deliveries, but not the financial results. So during the quarter, they produced 43 trucks, shipped 40 trucks. So the shipments were up from 31 trucks the same quarter in the previous year, but the number of trucks produced were down from 60 to 43. Revenues were actually down in the quarter year over year, 7.5 million compared to 10.7 million in the first quarter of 2023. But one thing I really want to bring your attention to is the gross profit, or shall I say gross loss. So this company has a negative gross margin, and it is a huge negative gross margin, 768% negative. So essentially, every time this company makes $1 in additional sales, it's losing $7.60 in gross profit alone, right? So the gross profit basically are what is the profit after costs that are directly attributable, variable costs that are directly attributable to your sales of your product or your service. So these are things like material costs, labor costs to produce the service or product, and then overhead costs that are directly attributable to that product. So this doesn't even include all your fixed costs like your rent, most of your salary. So, seeing a company with a negative gross profit margin is a major red flag. This is not a situation necessarily where more revenue growth is going to get you out of that situation. And in many cases, if this continues, more revenue growth is actually just going to make it worse. So loss from operations in total for the quarter, 145 million. And we can see massive shares outstanding here, 1.3 billion. So huge share structure. I believe this was previous to the, yes, this would have been previous to the 30 for 1 share consolidation. But the company did, as I said, release their Q2 deliveries information exceeding their guidance. So 72 hydrogen fuel cell trucks were delivered. So that's 80% growth year over year compared to the second quarter of last year. This is what has infused some more excitement into the company, much needed given where the share price has been trending. And people are thinking, well, maybe this is an opportunity for the company to really start to hit that acceleration point. Now, again, the problem that I'm seeing here is that we know that the number of trucks have increased, number of truck deliveries, so we can expect that revenues have also increased, but that may actually make the cash flow burn and the net loss worse, given the fact that they have a negative gross margin. Looking at the balance sheet, one thing I will say is they do have a good balance sheet, 350 million in cash, 282 million in debt, so about 68 million in net cash. Of course, this is not money that they have generated from operations. They're losing money from operations, burning cash flow. This is money that they've raised, but still, the balance sheet looks okay given that it has that net cash. But you're looking at a huge cash burn rate. So negative cash flow of almost $500 million, 450 million over the last 12 months. And this continues. We're expecting the company to continue to burn through significant cash. So their cash balance, given the fact that they also have debt, is not going to last them for very long. We are looking likely that this company is going to go back to the market in the near term to either raise shares through a financing or to increase their debt, or likely both. So our take on the company is that it is highly speculative. That negative gross profit margin is a major red flag. The more money they generate in revenues with negative gross profit margin, the more money they lose, right? So a lot of companies that are reporting a net loss, the solution to that is more revenue growth. But if you're losing $7 for every extra dollar of revenue, then revenue growth isn't necessarily the solution. Substantial cash burn rate, as I said, likely to increase debt, likely to issue shares soon, and also an extremely poor track record of investor returns. I mean, this company, understandably, there are new people in it now than there were back in 2020 when they had those problems. But ultimately, this is a company that made a lot of promises, did not follow through on those promises. I'm guessing, given that $34 billion market cap with no revenue, they were highly promotional as well. So they were really riding the wave of excitement for EVs. But once the market realized that there wasn't much there with the company, the share price reflected that. So we'd be concerned. We don't see any type of good track record there. And just, in conclusion, we don't believe that it's an investable company. Now, things can always change. Maybe they add some new customers, they change their cost structure so they start making money, or at least transition towards break even or profitability. But there's no sign of that happening right now. So until we see at least a sign of that, we wouldn't even consider this company to be investable. So I will give the mic over to everybody else, and they can tell me about how I just don't understand the technology.
No, I think that you hit the nail on the head. I mean, again, about a year ago, we did our electrification report. I highlighted about 11 electric vehicle manufacturers in that report. Only 3 of them were actually cash flow producing from that report. 1 being from the US, 2 are located in China. But other than that, there was basically no cash flow. Basically every single, little company profile that I did, I basically summed it up with, the company has been funding its operations through a combination of share issuances and debt. And yeah, I mean, there just really wasn't too much to dig into in regards to, good fundamentals or good, yeah, financials from these companies. And, even back then, like looking at Nikola, um, like for, I believe, fiscal year 2022, they ended up burning, I believe, about, over 570 million in operating cash flow. That's a lot of money to be burning through. And like Aaron said, negative gross margin. Ouch. That's not a good sign from a company.
Yeah, I mean, I agree. I think Aaron was too diplomatic. It looks like a piece of hot garbage, to be honest to me. I mean, they have 32 million in trailing 12 months revenues. And yeah, it's like for the scale this company would have to get to probably to get to profitability is
They're nowhere
yeah,
close right now.
exactly. Yeah,
Yeah.
for sure. All right.
Yeah.
Oh, sorry.
I was just going to add on quickly. You're probably seeing a bit of a short squeeze too, because it has been
Yeah.
a heavily shorted stock ever since the fraud. If you're wondering what the fraud was, the big thing of it was for their initial prototype. They just rolled a truck down the hill and presented it like it was working in a fully functional. That was like in 2017 or something. They actually have models now, but that's what that really was. And so obviously high promotional company. I think that really sums up the governance at the time when it was that. I think after the split, $1,800 now after they've consolidated, just to give you an idea of what you were dealing with at that time.
Yeah, another example of you're talking pre-revenue businesses. Even if they get to some revenue, the challenge is on the way. Well, I mean, this is fraud involved, to be honest. But yeah, the challenge is to get to a business that actually produces cash flow, and then that's going to drive the shareholder returns. A cautionary tale again.